Hi, Theo here from ElectroFX.com. Welcome to this next video in my day trading series. Once again, I'm using a chart here that I call WavEFX, and this is just my personal preference when trying to read the lower time frame price action. On your screen we have the euro dollar for January 14th and a very similar trade to the trade in the previous video. We have an area here which had a good reaction and has now been returned to. There's definitely some good order flow there, and now we just want it to be retested and prove itself so that we can take this next run down. Now for proof I'm going to use a WavEFX entry trigger, and this is just the black line that you see on the screen, same as in the previous video. We have a low in place right here, this is permanent, not going anywhere, and we have a high in place right here, also permanent, not going anywhere. If price comes up and breaks that high, then there's nothing to do, but if price does not break that high and instead comes down and breaks that low, we have a very different story. We have an equal or lower high followed by a lower low, and this is the proof that I'm talking about, that the area is holding once again and we can partake. The trade manager is once again going to be used for this video. It's something that allows us to do things in a set and forget fashion, so we don't have to sit there and stare at the charts. I'm going to place here a pending sell line so that if price comes down and breaks this line, we're going to enter the trade. If price comes up and breaks this high though, we want that to be void, so I'm going to place what's called an X sell line. And if price does enter the trade, we're going to need a stop loss, so I'm going to put that just up there. And we're going to need a take profit. Judging by what I see here with the price action on the chart, there's certainly something above the brown line magnitude that's happening that I can really see now in this format. So based on that, this is definitely the next obstacle that's in its path. It's accompanied by a couple of smaller level obstacles and definitely the conservative play. Don't forget, this is still somewhat counter trend and we haven't yet completely confirmed this turn. So I'm going to play it safe and stick with the conservative method. By placing the take profit right here, we can then judge our risk reward and just make sure this trade is even worth it. I can see we have a stop loss of 21 pips and a take profit of 25. So once again, it's really close to my bare minimums of a 1-to-1, but still, as long as I'm not risking more than I'm trying to gain, I'm a happy guy. So right now I'm going to place one more line in here, because if we don't quite make it to take profit, I wouldn't want this trade to turn around and become a loser. So once we get down to this area, I'm going to have my stop loss moved to +1, and at this point in time there's nothing more to do. So we're going to continue the video at the next juncture of this trade. Okay, this trade has been entered, the X sell line has disappeared, so we now have a stop loss in place and a take profit and a break even point. I can see that nothing really changed. We didn't have any messy price action before the trade entered, so things are exactly as we were expecting before, and really there's nothing else to do now, and we'll just wait for the next juncture of this trade to continue the video. Okay, the trade has reached the break-even point. This is when the trade manager sends out an email just to let you know. This enables you to come and just take a look now and understand how we've arrived at that break-even point and if there's any cause for alarm. It seems that we've come here in a straight line, so there's really nothing to worry about, and now we're just going to wait for it to hit take profit. Okay, this trade has reached take profit, another successful trade, a very simple strategy that is just rinse and repeat, and we do the same thing over and over again. I hope you've enjoyed this video and do stay tuned for more.